The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to another CW webinar. Thank you for joining us today. I'm Tiago Sá, and my team and I are here to bring you the main highlights of the fourth quarter of 2024 trade price report update. Today, we will focus on the key factors influencing cement prices, including shipping dynamics, domestic and trade prices, and our latest forecasts. For this presentation, I would like to introduce myself, Tiago Sá, Associate Director at CW Group, and my colleague Prashant Singh, Director at CW Group based in Mumbai. On today's agenda, we will start with an introduction of our company, what is it that we do, and what we have to offer, and of course, share the main highlights of the new report update. We'll start with a brief presentation of our company. We'll discuss shipping and energy overview. We'll talk about domestic prices, ex-works and retail prices, trade prices, and we will have some closing remarks. So CW Group is present across three distinct verticals: advisory, research, and media. Under the advisory umbrella, CW works with major global consultancies and leading institutions, including the World Bank and FUNS projects. We provide consulting and advisory expertise on a diverse product portfolio. For example, a recent sample of advisory projects provided includes a detailed study on circular economy for the MENA and West Africa regions. Under the research umbrella, CW focuses on cement demand globally, as well as detailed industry and country reports. We provide historical as well as forecasts for markets in a variety of products, including one of our main products, the TPR, this one that we are discussing today, and the VFR, the volume forecast report. We also provide commodity price assessments for cement and clinker, as well practical. At least under the media umbrella, you can have online access to our vast database. You can subscribe to newsletters for topics of interest, and we also have some industry-specific meetings. We will hold in person again, and our next meeting called Slag and Ash Trade 2025 will take place in Istanbul, Turkey on the 25th and 26th of March. So if you are interested, please don't hesitate to contact us for more information. The TPR includes quarterly reports with qualitative analysis on volumes, prices, and trends in global markets. It's a benchmark report that provides detailed insights on gray and white cement, clinker, and granulated slag prices, import and export prices, and regional prices index. Also, we talk about monthly trade volumes, tonnage, and ex-works and retail level pricing, USD per ton. Market information for key markets around the world with, let's say, 70 plus countries covered for trading data and monthly prices provided at country, regional, and global levels. Lastly, it has quarterly updates. This is an annual subscription with statistical model updated every second quarter and fourth quarter of the report. Additionally, we have monthly price assessments with end-user FOB pricing information for cement and clinker in the Mediterranean Basin, Persian Gulf, and East Africa. In this slide, you can see the country coverage of the trade price report. Although coverage for most regions is comprehensive in the sense that at least one or more factors are tracked, our major focus is to increase coverage of major African markets, hampered by a lack of consistent official data sources. Now, to start off, we are going to present a little bit of the global economic prospects for 2025. According to IMF's January 2025 update, global economic growth is estimated at 3.2% and changed from the July and October forecasts. However, notable revisions have been taking place beneath the surface, with upgrades for the forecasts for the United States offsetting downgrades to those for other advanced economies, in particular the largest European countries. US growth is estimated to reach 2.8% in 2024 on the back of strong consumption and non-residential investments, before slowing slightly to 2.7% in 2025 as fiscal policy is gradually tightening and the cooling labor market slows consumption. This projection, of course, did not consider the significant overhaul of federal spending and rising inflation that is expected to have a negative impact on the economic growth in the second half of 2025. These projections were made before the tariffs were imposed or planned. This impact is unpredictable, so the US forecast can be slightly changed for 25 and 26. In the euro area, growth seems to have reached its lowest point in 2023. The euro GDP is expected to reach 0.8% in 2024 as a result of better export performance. In 2025, economic growth is estimated at 1%, supported by strong domestic demand. In the case of emerging markets and developing economies, is forecasted to remain stable for the next 2 years at 5.2 and 5.1% in 25 and 26. In India, the outlook is for GDP grow at 6.5% in 25 and 26, while China's slowdown is projected to be more gradual. Despite persistent weakness in the real estate sector, China growth is projected to have slowed only marginally to 4.8% in 24, largely thanks to better than expected net exports. In the sub-Saharan Africa, growth is projected to be around 4.2% in 2025 as adverse impacts of prior weather shocks abate and supply constraints gradually ease. Global headline inflation is projected to decrease further from an average of 6.7% in 23 to 5.8% in 2024 and 4.3% in 2025 in the baseline. This inflation is expected to be faster in advanced economies, with a decline of 2 percentage points from 23 to 24 and a stabilization at about 2% in 25. In conclusion, the global economic outlook for this year is characterized by caution optimism, tempered by persistent challenges. Set the stage, let's begin with the shipping and energy market, which significantly impact the cement prices. In the fourth quarter of 2024, the BDI, Baltic Dry Index, averaged at 1,512, showing a significant decrease of 21% quarter-on-quarter and a significant year-on-year decline of 26%. This decrease reflects various market dynamics, primarily the impact of economic slowdowns in China. Global supply chain rationalization continues. The imposition of tariffs by the United States on a possible growing list of countries will further negatively impact global trade prospects. Now let's talk about the impact of these freight rates declines on energy prices, particularly bunker fuel. In the fourth quarter, crude oil prices were under pressure due to several key factors. The slowing down of economic growth in China and somewhat less so in India, the statements by the incoming US president about enhanced drilling in the United States all have negatively impacted crude prices. Moving to coal prices, we observe a mixed bag of trends across different regions. South African coal prices have been stable, while Newcastle coal prices have continued to remain range-bound. Meanwhile, stable demand for major importers, coupled with increased domestic consumption due to the establishment of new coal power plants, is keeping prices relatively stable in Indonesia. I would like to pass the presentation on to my colleague Prashant. Thank you.
Hello, everybody, and good afternoon, and welcome. Thank you, Thiago. And now let's please delve into sort of the meat of the presentation, where we look at what is happening in the world of cement pricing. So, without further ado, um, on this slide that you see before you, uh, in the fourth quarter of 2024, the average export price for cement in the Middle East is actually anticipated to have declined by around 0.6% quarter on quarter, reaching around $61.3 per ton. This, however, actually reflects an increase of almost 9.5% year on year. The pricing dynamics across the region have shown significant variability due to diverse economic conditions, even within countries. A case in point being Saudi Arabia, where there is a significant difference in variation in local pricing between the eastern part of the country and sort of the other regions. And so the pan-Saudi Arabia pricing tends to be dramatically different than what you would see in some of the specific local pricing. Also, in the fourth quarter of last year, export prices across Asia Pacific were varied and revealed sort of different trends. The average export pricing in China or Asia Pacific, excluding China, reached $32.3 per ton, and this represented an 8.4% decrease year on year, but a marginal 0.8% increase quarter on quarter. South Korea's export prices are expected to have fallen by about 0.7% in the last quarter to about $44.1 per ton, while Thailand saw an increase by 1.4% to $66.8 per ton. As in South Asia, Indian prices have actually cement prices in India have been in pressure in the last couple of quarters, especially since the buildup after the general elections in May of 2024 has been slow. Consumption has actually faltered or slowed down slightly in the last 2 quarters as the economy has cooled due to considerable geopolitical tensions. The cement prices in all regions, especially the south, have also remained under pressure. But it is now expected that in the next quarter coming, the first quarter of 2025, we will see a sustained increase in pricing as demand sort of recovers due to the significant infrastructure spending that was put into the budget in early February. And that was announced in early February this year. So that will help boost cement demand. Furthermore, India has cut marginally its interest rate. This will have a very positive impact on home loan rates, and this will also lead to residential construction demand, boosting consumption in the next few quarters. When we move on to retail pricing, as you see in the region, retail prices across the globe have sort of experienced varying trends, but as you can see, the prices have remained relatively stable across regions with only marginal improvements or declines. This is not expected to be the case when we are looking at Q2 2025. Q1 2024-5 will reflect some of the same trend as major decisions regarding tariffs imposed on China and other countries, possibly by the end of the first quarter, will take some time to reflect. So we expect to see much greater variation in prices in the coming few quarters instead of just Q1 2025. Prices in Western Europe. In the UK, prices were down by a 0.2% quarter-on-quarter to 320.8 per ton. Whereas in Germany, they declined by 101.3% quarter-on-quarter, despite having shown a only marginal increase of 0.2% year-on-year. The Middle East has been one of the most dynamic regions with price variations, and the UAE saw the largest price increase of 2.8% quarter-on-quarter to an average price of around $68.6 per ton. And that is also a byproduct of significant new infrastructure projects that have been announced in the country and therefore boosting demand. Now, as we move to this following slide, in Q4, cement demand has exhibited, especially in South America, significant challenges. Argentina has seen a considerable drop, with demand falling in November by a notable 14.5% year-on-year. In October, actually, the demand was even greater at 20%, resulting in a quarterly year-on-year deficit of 14.1%. In Brazil, coincidentally, cement demand has been showing a positive trend, rising by around 3% to 4.7 million tons in December. Now, this improvement has occurred despite ongoing economic challenges, which include high default rates, household debt, and inflation. But the country stands to significantly benefit. The industry stands to significantly benefit from accelerated housing infrastructure investment, which is estimated to lead to an investment of around $280 billion by 2026. But this comes with a big caveat to see if this amount of money will actually be released and pumped into the system according to the timelines given. Similarly, in Morocco, cement demand grew by an estimated 15.7% year-on-year in the last quarter, and this has been driven by increased construction activity and been sustained for the last few preceding quarters. Now, the biggest market that has seen a consistent decline has been China. And China's cement demand decreased to 55.1 million in December, which was down almost 1.8% year-on-year. And overall, in Q4, cement demand declined by 7.3% year-on-year. This continues to demonstrate that despite sort of the stimulus that has been pushed by the government, there are significant challenges for cement demand to sort of retain or regain, as a matter of fact, the levels we saw prior to COVID. Now, as we see also in Peru, cement demand has seen a marginal increase of around 0.1% year-on-year, but actually declined by 0.2% on a quarterly basis. However, given the fact that it's when comparing year-on-year, construction demand has actually remained fairly sustained, and we expect that Peru cement demand will sort of show sustained improvement over the next few quarters. Again, given the fact that cement is a widely traded commodity, there are multiple challenges that are going to come up for the industry, not only in this year due to possible tariffs, but also next year when CBAM, or the cross-border adjustment mechanism, is fully operational in Europe, this will have a massive impact on sort of price of cement price and sort of also volumes. So this will also this impact will be visible as we move in the following quarters of this year. Now, moving on, when we're looking at the main culprits or main export markets, these are the same two countries that have remained and are expected to remain the dominant exporters of both gray cement and clinker. Turkey continues to be the largest exporter, and on a quarterly basis, basically on a monthly basis and a quarterly basis, the biggest markets for Turkey tend to be the United States and Israel. And that has not sort of significantly changed over the last few years. Vietnam has also been increasingly exporting clinker, and we expect that the United States was going to be an important West Coast United States was going to be an important region where we should see increased clinker exports due to rising demand, and not only that, because of environmental policies that are posing challenges for existing production facilities on the West Coast. So it might be that we will see that increased clinker exports coming in due to the fact that they can take advantage of grinding facilities to then grind and distribute to the West Coast. We expect clinker prices on the next page. We expect, as you can see, prices have remained largely stable. They have seen a slight increase in the third quarter, which is not unexpected. That's usually the quarter prior after the monsoon, and also the quarter prior, the summer quarter, where main construction is done in both North America and Western Europe prior to the winter. So it is no surprise to see that demand and prices peak during that period. We do expect that Q4 is relatively stable, but as I said, the next succeeding quarters in 2025 are definitely expected to see larger variations due to events not under direct control of the industry. White prices have actually seen sustained variance, and this is primarily because of the fact that white is a premium product, and container prices have shown slight improvement, but sustained demand now remains to be seen, given the fact that Chinese growth is slowing down, and sort of India's growth has also slowed down since the last couple of years, and the United States itself is expected to see a slowdown in economic growth in the coming next few quarters. Cement demand, white cement demand in Europe will also be under pressure this year as the region sort of grapples with changing macroeconomic as well as geopolitical factors, including sort of possible resolution to the war between Ukraine and Russia, and maybe a trade war with the United States. These all factors will sort of have an important impact on sort of demand within Europe and consequently pricing. On the next page, as you can see, we have tried to give you a snapshot of what happened in Q4. And as you can see, it presents a varied picture, but Chinese prices have sort of increased. This is because Chinese prices had taken a severe beating in terms of year-on-year last year. when demand, because of the Evergrande collapse. That was a very challenging period for the Chinese economy. There has been sustained investment by the Chinese government to sort of boost demand, and that has sort of helped push prices slightly higher this year, far away, of course, from their peak a few years ago. In the rest of the world, as you can see, there are only marginal improvements or declines. And this is not expected to sort of be very much different in the next quarter, which is the Q1, but we'll definitely see significant changes in the preceding quarters after that. And now I would like to leave you with just a few thoughts. The global cement market is influenced by a complex web of factors, which include economic growth, geopolitical events, and shipping dynamics, as well as changing regulatory laws. And these are all happening at a very fast pace and in different regions at different speeds. And this is dramatically going to sort of be reflected in the next few quarters. Now, while some regions have been experiencing price increases, some have faced downward pressures due to local market conditions, India being a case in point, that despite GDP growing at 6.5, construction has actually slowed down, resulting in a decline in prices in the last couple of quarters. The outlook for the next few quarters is of increased variability, and we expect the most significant price changes to occur in regions with strong construction activity, whereas markets that continue to face economic challenges might see price stability or even declining prices. And with that, I'd like to wrap up and thank you all for your time today. I hope this presentation has provided valuable insights into some of the factors that are driving cement market prices, and we encourage you to sort of engage with us on the contact details on the screen to pursue further lines of inquiry, not only related to the presentation, this data that we have shared with you, but any other data on specific markets that you should require. So thank you, everybody, and see you next time.